All right, our topic for today is all about double entry accounting, and our focus will be on the transaction worksheet. So, to start off, when we talk about double entry is all about accounting uh, process where there will be equal and opposite effects in at least two different accounts. So, it may be one asset account or one asset liability, and then probably an equity account. So it should be always equal. Okay, it doesn't necessarily mean that it's only one account in one side, but rather there can be possibility of two accounts on one side or one side of the balance, which let us say debit, and just one balance or one side on credit. So as long as the amount will be equal or balance, we will use the term balance, then that will be fine. So those effects of transactions we can see here. We have increase in an asset account and increase in liability account. So when you increase the debit, the normal side of asset, which is debit, then the normal side of liability is credit. So both increase on debit and credit, then that will be equal. Another one is increase in an asset account and increase in equity account. The important thing that you must remember here is all about the normal side or normal balance. Okay, so asset, the normal balance or normal side will be debit. So when you increase that one, it will increase the debit. While equity, the normal balance or normal side will be credit. So if you increase that one, it will be on the credit side. Okay, so debit will increase, credit will increase. Another example here, decrease in an asset account, decrease in liability account, decrease in an asset account, decrease in an equity account, increase in an asset account, decrease in another asset account. So this is possible. For example, if you purchase an equipment, okay, so you will debit equipment or the balance of equipment will increase while your cash, let us say you paid for cash will decrease. Increase in liability account and decrease in another liability account, that's possible. Increase in liability account, decrease in equity account. Okay, let's take a look on sample transactions and how it affects the accounting equation. Okay, so the first transaction it says issues shares for cash. On 1st October, Wong Proprietary Limited issues shares in exchange for 100, sorry, $10,000 cash. So cash is an asset account, so we have cash here, $10,000. And equity, or shall we say share capital or shares, will be equity account. So you will see here on the other side, we have $10,000. So if you see the debit or the asset side and equity side, there will be both 10,000. So it's balanced. Next transaction about borrowing money from a bank. Okay, 1st October, Wong Proprietary Limited borrows the $5,000 from ANZ Bank. So here we increases the cash, so it's positive here. So the total cash now after the second transaction is $15,000. Now, bank loan is classified as a liability account. So under liability or liabilities section, we have 5,000 there. And equity, we have 10,000. So if you add liabilities and equity as per accounting equation, that will be 15,000, which is equal to the other side, 15,000. Okay, purchase of office equipment for cash. 2nd October, Wong Proprietary Limited acquires office equipment by paying $5,000 cash to Superior Equipment Sales Limited. Okay, so after transaction 2, you can see there, okay, we have cash $15,000. Now we purchase an equipment using cash. So meaning the cash will be reduced by 5,000. Then the 5,000 will be transferred to the account office equipment. Okay, so this is an example of increase in one asset and decrease in another asset. So if you total both assets, that will be $15,000, while liability and equity will remain the same, $15,000. So again, still balance. Okay, receipt of cash in advance from customer. Okay, 2nd October, Wong Proprietary Limited receives 1,200 cash advance from Arnox, which is a client. Okay, so in number 4 transaction, we receive the money or the cash, so it will increase our cash $1,200. When you go to the other side, this is receipt of cash in advance, so meaning we haven't provided the services, that will be treated as a liability, which means we still have obligation to perform the required services by the client because they paid in advance. We haven't performed it. That will be an obligation, which is under liability section. So that will be 1,200 on liability side, which is the account title we use will be revenue received in advance. Now, if you total the assets, cash and office equipment, we have 16,200. Liabilities and equity, if you combine, we have 16,200. Again, still balance. Okay, fifth, render services for cash. 3rd October, Wong Proprietary Limited receives $10,000 in cash from Copa Dollar Company for advertising services performed. Okay, here you receive cash. So the fifth transaction, we had an increase in cash of 10,000. So the total cash now is 21,200. Office equipment remains the same. Bank and revenue received in advance will remain the same. Now, if you go to share capital, 10,000 remain the same. And then equity section under retained earnings. Okay, this retained earnings is pertaining to, or we will use for now as the account that we will uh, have in recording revenue and expenses. Okay, so in this case, 10,000 for service revenue. You can see the explanation at the right side. Now, if you total both cash and office equipments, we have 26,200. If you total the liabilities and equity, we have 26,200. Again, balance. So each time that you will have transaction, you try to test the balance. Okay, payment of rent in cash. 3rd October, Wong Proprietary Limited pays its office rent for the month of October in cash, $900. Okay, so we paid, it reduces our cash by 900. The cash now is 20,300. Equipment remains the same. Bank loan remains the same. Revenue received in advance remains the same. Share capital remains the same. Now, under retained earnings, as I mentioned a while ago, we will use this for now to record any revenue and expenses that we have. So here we have rent expense 9,000, sorry, $900. So the retained earnings now is 9,100. Okay, so asset side total 25,300, liabilities and equity 25,300. Just be mindful about those sign, okay, if it is positive or negative. Okay, it might affect the total. Okay, 7. Payment of insurance in cash. 4th October, Wong Proprietary Limited pays $600 for 1 year insurance policy that will expire next year on 30th September. Now, take note, This is for 1 year insurance policy, so meaning we haven't consumed that policy yet. So what we will do is we will record it under prepaid insurance. Okay, so you can create another account for asset prepaid insurance. So someone will ask why we treated this prepaid insurance as an asset. Remember, asset is a resource that you can still use to benefit you in the future. So prepaid insurance, if you haven't consumed it, it will benefit you in the future. Okay, so cash, we paid cash there. So we reduces the balance of cash by 600. So we have 19,700. Prepaid insurance, a new account, 600. Office equipment, 5,000. Bank loan, 5,000. Revenue received in advance, 1,200. Share capital, 10,000. And retained earnings, 9,100. Okay, purchase of supplies on credit. On 5th October, Wang Proprietary Limited purchases an estimated 3 months supply of advertising materials on account, okay, from Aero Supplies for $2,500. Now, this is a supply for 3 months. Again, if you purchase supply, we haven't used it, so but we will be benefiting from it in the future when we use it. In this case, you will treat this as an asset. Okay, so if it is not consumed yet, it is an asset. All right. Now take note, this is a purchase of supplies on credit, so we haven't paid it. So you can see in the cash uh, column, we didn't deducted any amount there. Okay. Now we created another account that is supplies under asset account. Okay, prepaid insurance remains the same, office equipment remains the same, bank loan remains the same. And then now for purchasing supplies on credit, we created a new account. This is the account that you will use uh, when you purchase supplies on credit. Okay, so that will be accounts payable. In this case, because you haven't paid the supplies or the amount that you owe for purchasing supplies, this is an obligation, so meaning accounts payable will be under liability. Revenue received in advance remains the same, share capital and retained earnings remains the same. Okay, hiring of new employees. Now, even if we hired a new employee, it doesn't have that monetary effect yet. Okay, so if there is no monetary effect, as we had uh, known in our previous discussion, it doesn't require any uh, adjustments. Okay, so nothing will nothing has changed, so we will continue. All right, payment of dividend. Dividend is share in profit of the company. So those who owns the company, they usually receive this portion of the profit. Okay, so that is dividends. So if they pay dividends, obviously it will reduces our cash and then our retained earnings. This dividend will be under retained earnings. So as you can see, get the balance 27,300, 27,300 still remains the same. Okay, last transaction is all about payment of cash for employee salaries. So salaries, 2 week salaries you're paying, this is uh, expense. So we paid cash, it reduces our cash. And then you go to retained earnings. As I mentioned to you, we will only use for now retained earnings to account for expenses. So here we have salaries expense 4,000. So it reduces the retained earnings. Now get the total. We have cash 15,200, supplies 2,500, prepaid insurance 600, office equipment 5,000. So the total is 23,300. Liabilities and equity, we have bank loan 5,000, accounts payable 2,500, revenue received in advance 1,200, Share capital 10,000, and then retained earnings 4,600. And the total is 23,300. So this is how you prepare transaction worksheet. And always remember, both sides should be equal. Okay. Okay, so thank you for your time watching the tutorial session. Okay. See my next video for more accounting discussion. Thank you.